It's going on, traders, and welcome back to IFX. As you well know, the market is very hard, especially if you don't know a simple strategy. And we know that 50% is technical and 50% is emotional. And when we look at the market, we want to have less, right? Less indicators because less is more. But when you look at something like this raw graph, well, it's very hard to tell when we can buy and when we can sell exactly and when we can avoid entries. What if I show you a very simple strategy that you can start making profits day in and day out with a very simple strategy? So the key factors in here is going to be the daily Fibonacci zones, okay? We're going to have 7 levels, which is going to be your resistance levels, and then 7 levels of support, okay? So what the main idea in here is we're going to have the active trading area. And what that means is that we're only going to trade inside yesterday's high or below yesterday's high and above yesterday's low. Anything above here we're going to avoid, and anything below yesterday's low we're going to avoid, because we want to avoid any losing trades. All right, so what's the idea behind here? The idea is that we want to look at the RSI. So when the RSI reaches to the 70 area, very close for the first time, and we are in the red zones below yesterday's high, well, it's time to look for a sell entry. The main idea is that we look at this moving average, and when the moving average we're far from it, well, it's a good sell, right? Because we want to reach to the moving average as the first support, and then eventually we want to get out anywhere within the first levels, okay? Sometimes it all depends on market conditions. Now, there's other levels in here that we have that I use as the 4-hour highs and lows. If we are inside those 4 hours high and low as a minimum of 2 candles back, or the first candle in here, then that is the best entry. So what that means is that, let's just say, for example, if you can say here at the bottom, price or the RSI got really close for the first time to this 30 level, okay? So we're on the second, more or less, first level. You know, the lower the level, the better it is. So right here we had a green arrow. So it's best to wait for price to go above this line so that we can make an entry, okay? Where's going to be our stop loss? The stop loss is going to be when a candle closes below this arrow, okay, or this candle, the low of the candle, and we take profit is going to be the other opposite levels. Now, 60% of these arrows are going to be great, are going to work out right away, and the other 40% are not. Why? Because, well, it all depends on market conditions. It all depends if we're trending or we're ranging. So we might get many arrows most of the time if we're in a ranging market. Now, if we get any sell or buy alert within the white area, we're going to avoid that because the market is ranging. Okay, so the idea, the first steps is that what you're going to keep in mind is that we're going to sell only within the trading active area, or going to buy only above yesterday's high or low. Now, again, we want to look at the RSI, where the RSI has reached the highest in the beginning of the day, right? Right here, this is the highest. We are on the sell zone, and then we are inside this level right here. So it could be a good idea that we can look for sell entries. As price starts to go lower and lower, it reached the first level, and eventually it reached to the lower level in here. And then all we do is the opposite. Now, look at in here, look at this example. Look at the RSI reached the 30 level. Yes, we are on the green zones, but unfortunately, if we get an arrow, we are far away from this. This is going to act as a resistance level, okay? So we have to be very careful. So again, in here, the same thing. So what we do is we're going to wait for a new 4-hour candle to close, and then we want to be inside the prior candle, okay? So if you see the high and low of the candle, and then we're going to buy. We want to make sure that the entry happens inside yesterday's low, and then voila, it worked out very nice. It came all the way to the white area, and that worked out very nice. Again, we want to be sure that we want to have some distance from my moving average to my entry. as much as I can. If it's really, really close, for example, let's just say this was in the red zone and then it hit the moving average, where there are very low probabilities that is going to work out unless the candle closes below it, and then probability that it might keep on going. So again, this is why we have the Fibonacci pullback zone, so we know exactly where to get in and where to get out on the opposite levels. This is one of the examples where we want to avoid any entries. So if price is above yesterday's high, take a look at the moving average, is also outside. And then if we get any sell entry, although we are on a red level, well, we can't enter because there are really high probabilities where price is not going to come back into the white area or the first two levels, okay, which is our exit points. So again, if you try to do something like this, you're going to lose a trade and you're going to probably lose your account. So keep this in mind. You want to only be trading within inside your active trading area, okay? So very, very nice. So in here, let's just say we got a green arrow. This was the lowest of the day. In order for us to confirm if we want to buy, if we don't want to follow that it hit the green area, we have to wait for the candle to close above the moving average, and we have to make sure that the moving average is going upwards and is green, so maybe it indicates that it's gonna keep on going higher, okay? So that's the only thing, or the other strategy when we don't follow, when we don't enter inside the green zones on buying, okay? So again, but the first strategy that I want you to follow only would be selling inside the red zones and buying inside the green zones. Here's another example. This is where price goes below yesterday's low, the moving average crosses below it, and if you try to buy, well, again, you will be on a losing end because price is below it, and then again, it's best to look for sell entries. But this is another strategy where we can look for sell entries when we are on the green zones, which sometimes can be tricky. All right, so again, here price hit the 30 level. Actually, it's been on this level for many times, and then again, prices keep on going lower and lower. So we want to avoid this and not enter at all. You want to move on to another pair and see what other pair has to offer, what's inside the yesterday's high and low. So if you have any questions, please let me know. Send me a message on the Telegram channel, or you can email me and I will get back to you.